Hello everyone, my name is Chen Shulin. It's a great pleasure to be here today to present a financial analysis of Meituan, a digital platform deeply woven into the fabric of daily life in China. First, let me begin with a brief introduction of Meituan. Founded in 2010, Meituan has grown into China's premier live services e-commerce platform, encompassing food delivery, in-store services, hotel bookings, travel, and e-commerce. By the end of 2024, it boasted over 770 million active users and served tens of millions of merchants, with peak daily orders exceeding 70 million. Today, I will analyze Meituan's financial performance from 2020 to 2024 across 5 key dimensions. The 5 key dimensions are as follows: short-term liquidity, operating efficiency, profitability and asset efficiency, profit margins and returns, shareholder value. Now, let's dive into the analysis. The first part is about the short-term liquidity of Meituan. Working capital is a vital indicator of short-term financial health. In 2021, Meituan's working capital surged by 113%, primarily fueled by its IPO proceeds. Current assets rose 37%, while current liabilities increased only 34%, reflecting aggressive investments in new ventures like Meituan Youxuan. In 2022, working capital declined 16% due to a 69% spike in current liabilities. However, from 2023 to 2024, it resumed a steady upward trend as current asset growth once again outpaced liabilities, signaling early success from Meituan's high-quality growth strategy. Over the period, Meituan's current ratio ranged healthily between 1.5 and 2.2. It peaked in 2021 post-IPO, declined during expansion, and began recovering in 2024, reflecting financial rebalancing. Given Meituan's asset-light model, the asset-tax ratio is a more precise liquidity gauge. It consistently remained strong, above 1.5 throughout, peaking at 1.92 in 2021 and recovering to 1.76 in 2024. This indicates Meituan maintained robust short-term solvency even while expanding. The second part is about the operating efficiency. I will talk about the accounts receivable turnover and the average collection period together. Meituan's receivable turnover improved markedly, rising from 10.71 in 2020 to 22.26 in 2024. This signifies significantly greater efficiency in collecting cash from credit sales. Consequently, the average collection period dropped substantially from 34.08 days to 16.4 days. This highlights enhanced credit control and cash flow management, reducing reliance on external financing and bad debt risk. I will also talk about the inventory turnover and the average sales period together. Inventory turnover declined from 238.03 in 2021 to 136.77 in 2024, attributable to expansion into inventory-heavy segments like group buying and B2B supply. Crucially, the average sales period remained highly efficient, increasing only slightly from 1.53 to 2.67 days, demonstrating effective inventory management despite a broader scope. Meituan's operating cycle shortened significantly from 35.76 days in 2020 to 19.09 days in 2024. This reflects faster capital turnover and the efficiency of its hybrid model, balancing platform services with physical inventory. The third part is about the profitability and asset efficiency of Meituan. The total asset turnover increased from 0.77 in 2020 to 1.09 in 2022, indicating improved efficiency in generating revenue from its asset base. This trend shows Meituan ensured meaningful revenue contribution alongside asset growth. As for the times interest earned, the operating losses in 2021 and 2022 rendered the ratio not meaningful. However, the ratio rebounded strongly to 9.41 in 2023 and further surged to 27.56 in 2024, signaling dramatically enhanced profitability and debt servicing capability. The debt-to-equity ratio consistently below 1.0 from 2020 to 2024. This shows Meituan relied predominantly on equity financing, reflecting a low-risk capital structure. The temporary rise during 2021 to 2023 linked to a new business investments remained manageable. The equity multiplier rising from 1.57 in 2020 to 1.91 in 2022, before stabilizing through 2024. This suggests moderate and controlled leverage. Staying below 2.0 signals Meituan's prudent use of financial leverage. Next is the fourth part of profit margins and returns. As for the gross margin percentage, after declining to 23.71% in 2021 due to cost-intensive expansion, gross margin rose steadily to 38.44% by 2024. This demonstrates cost control, economies of scale, and improved monetization. As for the net profit margin, this margin underwent a complete cycle. Starting at 4.10% in 2020, it plunged to negative 13.14% in 2021 during heavy investment, before recovering impressively to 10.61% in 2024. This remarkable turnaround reflects successful cost control, operational optimization, and the conclusion of the cash burning phase. The return on total assets dropped to negative 11% in 2021, but rebounded dramatically to 52.09% in 2023, normalizing at a healthy 12.01% in 2024. This underscores significant gains in asset efficiency and revenue quality. The return on equity fell to negative 21.09% in 2021, but recovered strongly to 22.07% in 2024. This shows a robust recovery in shareholder value creation and financial health, reflecting a new mature profit structure and enhanced capital utilization. The fifth part is about the shareholder value. The earnings per share dropped from 0.81 yuan in 2020 to negative 3.90 yuan in 2021, then steadily rebounded to 5.85 yuan in 2024. This sharp recovery highlights Meituan's successful transition from high expansion to scalable profitability. The price-earnings ratio spiked to 305.48 in 2020 due to market optimism. Negative price-earnings ratio in 2021 to 2022 distorted the metric. By 2024, it stabilized at 24.14, signalizing a return to rational, earning-based valuation. No dividends were paid between 2020 and 2024, as the company prioritized reinvestment and strategic expansion. The dividend ratio was therefore not applicable during this period. The book value per share increased consistently from 16.60 yuan in 2020 to 28.56 yuan in 2024. Notably, it continued to rise even during loss-making years, reflecting strong capital preservation and growing shareholder equity. The last part is the conclusion. Between 2020 and 2024, Meituan has successfully transitioned from a pace of aggressive capital-intensive expansion to one of sustainable profitability and financial discipline. Key metrics, including earnings per share, return on equity, asset turnover, and the operating cycle, all demonstrate a company that has matured operationally, optimized its capital structure, and significantly increased shareholder value. This transformation positions Meituan for long-term, stable growth within China's dynamic digital economy. It now stands as a resilient, efficient, and profitable platform company, poised to deliver consistent value to its users, partners, and investors. This is all about my presentation. Thank you for listening. Thank you.